Bloomberg News has learned a Microsoft Yahoo web search deal could get done today. For more on the implications of the deal, whether or not it's a win-win for both companies, we are joined by Henry Blodget. He is the CEO of the Business Insider. And Henry, as many know you, sort of symbolize the rise of the internet stocks in the 1990s.
For better and worse.
There you go. Well, we're glad to have you with us here on set. So what do you think the chances of this deal happening? I mean, we're treating it like a 9 out of 10. I mean, is it a done deal in your minds?
Everybody is. I mean, we got news last night. We had news a few days ago. But as you said earlier, this is a deal that's been in the works for a year. It'll be a shocker if it actually happens, even though it's almost guaranteed to happen.
Who knows who needs whom more at this point? Can you break it down and say Yahoo needs this more than Microsoft or the reverse?
I think both companies really need a partner like this. You've had Yahoo. They had a few months where they were starting to increase share. It looked like they didn't need Microsoft. And then now they've started to lose it again. So putting them together is good, but the way the deal is structured, at least the early details that have leaked out, are not promising to me.
What don't you like about it?
Basically, what they're going to do is split responsibility for technology and sales. So Microsoft builds the technology, Yahoo handles the sales. Lots of potential problems with that. These are huge businesses, and when you split those apart, it just becomes a logistical nightmare.
Henry, you say that it doesn't look all that promising to you. It also seems, based on the reports that we've gotten thus far, that it's going to be smaller, less all-encompassing than the deal that was initially envisioned. Is that a disappointment to investors for both Microsoft and Yahoo?
Again, very early, we have to see the details, so just jumping on what's been reported, yes, it's disappointing, because last summer Microsoft offered $45 billion for the company, then there was a $1 billion deal on the table for search. A couple of months ago, Carol Bartz at Yahoo said a boatload of money. Now it looks like a simple revenue share. So if it's a huge revenue share with a lot of big guarantees, then fine. But if it's just a best efforts revenue share, it looks like a very weak deal for Yahoo.
But how big a deal is it that Yahoo isn't getting that upfront payment that people initially envisioned?
I mean, again, if it is structured that there are real revenue guarantees, so no matter what happens, Yahoo gets a boatload of money over the next couple of years, fine. Then it doesn't matter that it's up front. But if it's just best efforts, we'll see what happens. You get your cut. You have to say Yahoo's play looks a lot weaker here than it did 6 months ago.
To what extent should Google be feeling that the competition is increasing, or is this just a yawn for them? I mean, they have over 65% of the combined search, at least versus last year, versus Microsoft, Yahoo combined.
I think on the face, you would say, ooh, scary, 30% player. But I actually think this is good for Google in a lot of ways. First, it's going to take the regulatory scrutiny off of them. They can say, look, huge player, Microsoft, how can you be saying we're the big bad boy here? And then secondly, it just, again, the way the deal is put together thus far, it's incredibly hard to be a cohesive, strong competitor when you've got two huge organizations involved like this. So I think Google will say, oh, it's terrifying, we've got to go slow. But I think internally they're probably saying, thank goodness, there's no way this is going to work.
You mentioned this word regulatory. I mean, do you think that this current proposal, Microsoft, Yahoo, could come under regulatory scrutiny?
I think it'll come under scrutiny. I think the Justice Department would be crazy to block it because, again, Google has 65% of the share of the U.S. market. This combined entity will have 30%. How could that be a bad deal? But it will be scrutinized. And you go back with Microsoft lobbying heavily when Google was trying to do a deal with Yahoo. Google's going to do the same thing right back.
Do you really expect, though, Henry, that this is going to take the regulatory pressure off Google? Microsoft has been through the antitrust ringer countless times, not just here, but obviously in Europe again. You have to figure, though, that the antitrust cops have Google in their sights. They've had their day with Microsoft.
Oh, there's no question they do. But again, it's hard to make a credible argument than when you have Microsoft and Yahoo with 30% of the market to say with a straight face, oh, Google owns everything. It's just a monopoly, so mean. We've got to grease the wheels for everybody else. It just sounds silly.
But Google isn't just in search, though.
No, that's right.
The book deal has drawn scrutiny. There's all kinds of other markets that they're exploring. You know, the whole ID tag thing. You know, you shoot yourself or take a picture of the thing at the store.
Google is the Microsoft of this decade. There's no question. But I think in this market, again, if you go back to operating systems with Microsoft, Microsoft had 90+% of the market. They owned it completely. People aren't building their whole businesses around Google in the same way with releases coming out that Google can control and so forth. So scrutiny, yes. But I would be shocked if the Justice Department actually blocked a deal between Microsoft and Yahoo here.
Henry, we thank you so much for your time.
And thank you for having me.
Yeah,
great to be here.
Glad to have you. Henry Blodget, CEO of the Business Insider.